The company that we're going to be talking today is retesting its latest all-time highs. And while we were in the thick of COVID in the beginning of March and April, people didn't think this company would do as well and sold it off by around 70%. But the company has come back and proven that it's able to grow its revenue by 50% year over year, despite its main customers being almost shut down. They also just IPO'd on the New York Stock Exchange 1.5 years later after IPOing on the TSX. And one thing that I just found out is that this company is also owned by Ark Invest. Can you guess what company we're talking about today? What is up, you guys? My name is Daniel, and on this channel, we talk about stock market investing. And in today's video, the stock that we're going to be talking about is none other than Lightspeed. If you guys guessed Lightspeed from my description in the beginning, give yourselves a pat on the back, as well as smash the like button. So Lightspeed is approaching its all-time highs for the third or fourth time. But this time, I think that it could break past its previous all-time highs and go to new heights. The stock typically trades at a fairly high PS ratio in the past, and today it's still the same. However, because the company has grown year over year and quarter over quarter, the PS ratio is not as high as what we saw before. So I think this fact is the first reason why we might see Lightspeed go past its previous all-time highs. The fact that Lightspeed's been growing at 50 to 70% year over year for each of the past 4 quarters shows that even though they're in the middle of a pandemic, they're able to still grow the revenue. And this is only because Lightspeed is providing value to its customers. In addition to this, they're also able to attract new customers into their platform. And that's because the traditional methods that most retail and food restaurants have is not working out for them. However, when they join in with Lightspeed, the fee structure is fairly simple, as well as they get a lot of extra bonus features that they wouldn't have with their payment provider or their e-commerce provider. Lightspeed offers both of these, as well as gives different options like curbside pickup, as well as order in advance for delivery if you're in the food industry. They just announced an order ahead feature, which I just mentioned, which allows customers to go onto a restaurant's website, place an order, and pick up the order X amount of minutes after the order has been placed. For a traditional restaurant or mom and pop shop, they're not able to have the overhead to hire software developers and develop a website like this. But for large chains like Domino's or McDonald's, this is no problem and they already have that. But Lightspeed is targeting the small and medium businesses. In the latest quarter, Lightspeed reported they had 77,000 different customer locations, which is a 34% increase year over year. So it's clear to me that Lightspeed's customers in the retail as well as the food industry are looking for an e-commerce platform that provides them more than just a checkout or a website. They're looking for these extra features like pay in advance and pick up at the store. They also recently signed a fairly large contract with Landscape Golf Management, which manages 30 different golf courses. So this is a pretty big contract for Lightspeed because golf courses are pretty much a money-making machine. So Lightspeed securing this big customer shows that they still are growing despite this pandemic happening. So we look at some quick financial statistics. For the trailing 12 months, Lightspeed earned a total of $133 million in revenue. They currently have a market cap of around $3 billion, which puts their PS ratio around 28.5. If we compare that to some of the competitors like BigCommerce, which has a PS ratio of 47, or Shopify with a PS ratio of 62, Lightspeed is fairly undervalued compared to these guys. But the reason why Shopify has such a large PS ratio compared to these other two is because of its growing revenues year over year at an exponential rate. The previous quarter, they grew revenues at around 97% year over year, versus Lightspeed was around 50%. However, BigCommerce only showed a 33% growth in revenue year over year. So to me, I think if you're looking between BigCommerce and Lightspeed, Lightspeed is a better option here. And despite Lightspeed being focused on retail and the food industry, and BigCommerce just on all e-commerce stores, I think that Lightspeed still has the opportunity to come in and play in the e-commerce space. Right now, with focus on retail locations as well as food industry locations, gives them a wider breadth in understanding these different types of customers. And I think for some of these larger players in the e-commerce space that only have an online store, may one day eventually set up a retail store. And that might just be a flagship store in major cities. And if Lightspeed's able to somehow convert those guys over because they end up having a retail location or even multiple retail locations, this will help them expand further. Looking at the revenue growth of Lightspeed, we can see that they're growing at least 50% year over year for the past 4 quarters. And if we stretch this out at 50% year over year for the next 4 or 8 quarters, then next year the forward PS ratio for the next 12 months will actually drop from a 28.5 to a 19. And if we go another year after that, if Lightspeed continues to grow at 50%, then the PS ratio will come down to a measly 12.6. I think it's very possible for Lightspeed to continue to grow at these rates because in the middle of the pandemic, they're able to show they can grow 50% year over year. And when the world comes out of the pandemic, I think their growth will continue possibly at the same clips or even greater. One last thing to note is that Lightspeed gave guidance about the next quarter. And they said for the next quarter, they're predicting they'll earn around $38 to $40 million in revenue. However, if we look in the past quarters where Lightspeed actually gave guidance, they tend to be very conservative on their guidance. So I think this guidance that they gave for the next quarter to be $38 to $40 million, they're probably going to pull somewhere between $41 and $44 million in my opinion. If they come in at around $44 million, that would mean they have a revenue growth of 54%. However, if their revenues stick between the guidance of $38 million and $40 million, then that growth is 40% year over year. And I think that right now investors are actually pushing up the stock close to the all-time highs, and they're actually waiting for the earnings report of Lightspeed. Previously, Lightspeed reported their earnings on August 6th, so I expect they'll report their next quarter earnings on around November 6th. So definitely stay tuned for that to see if Lightspeed smashes the revenue guidance, and also what future guidance they give for the next quarter. When I was looking at Lightspeed on Yahoo Finance, I went over the holders tab to see who was the largest institutional holder. And lo and behold, that was actually Ark Invest, which surprised me quite a bit because I didn't think Ark Invest knew about Lightspeed since it was a predominantly Canadian company. As of June 29, 2020, Ark Invest reported they had around 49,601 shares. And this is a total of $1.1 million invested in Lightspeed. So it is still a fairly small position compared to their position in Square, for example, which is around $90 million. But if Lightspeed continues to outperform going forward, I can see Ark Invest throwing more money into this company. Now that it's traded on the New York Stock Exchange, Lightspeed is also exposed to more larger institutional investors in the States. And what this means is when institutional investors come into a company, and Lightspeed being a small cap company, this could really help boost the stock. Because institutional investors usually aren't buying in like 20 or 30 or 40 shares, they're buying in the hundreds or even millions of shares. And as Lightspeed continues to grow from a small cap to a medium cap, then this will open them up to even more institutional investment, which will further prop the stock price up. But again, Lightspeed's stock price also has to follow some fundamentals. We can't just say that Lightspeed will indefinitely go up, but Lightspeed has to prove itself to its investors and institutions that it's able to continue to grow at 30 to 50% clips to be worthy of being in these large portfolios. For me personally right now, I still hold on to my Lightspeed shares and I've not sold anything yet. My cost basis is around $31 per share and I was averaging in. But unfortunately, I didn't buy when it was all the way down at $13 per share, but 2020 hindsight. For now, I'm still happy with my $31 cost basis and will probably not be buying anymore here on out, unless I see a fairly big dip in the stock. I will be, however, waiting for that earnings report that comes out in November to see how their growth is. If their growth actually hits like 60 or 70% and they have extremely good guidance, I maybe will consider opening up a larger position once the stock price comes back down after the pop. Because of course, if they report a 60% increase in revenue, as well as phenomenal guidance, then their stock will definitely shoot up. I would love to hear if you guys are holders of Lightspeed stock down in the comments below. And if you're not, let me know why you don't hold it, because it's always interesting to hear both sides of the coin. If you guys enjoyed this video, remember to smash that thumbs up button, subscribe to the channel, hit the notification bell, and stay tuned for the next one. Keep up the grind and have a great day.